Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm starting the last and final short problems on cash flow statement. So totally 12 short problems are there apart from the long problems, the main problems. So short problems, last one, 12th one I'm going to do in this video. Already 11 problems I've completed till the last video. Hope my regular viewers are continuously watching all the earlier videos. Now you will get more interest in understanding this cash flow statement. This chapter is very important, I told you. So if you are first time joining now, I suggest you to go to the playlist of my channel. Select the subject financial statement analysis. Select the topic cash flow statement. Watch the initial videos. Then only you can be able to understand now. Now I am going to start the 12th problem. 12th short problem. So before starting the problem, I expect my viewers to have a printout of the problems, which I have given in the link under my description. So take a printout and keep it ready before start watching this video. Now 12th problem. From the following balance sheet of Arvind Limited, you are required to prepare cash flow statement. So here two balance sheets are given. 31st March 2017, then 31st March 2016. So last year 16, current year 2017. So we have to make the cash flow statement for the year ended 31st March 2017. So equity and liabilities. Shareholders fund. Share capital last year 4 lakh, current year 5 lakh. So last year share capital was 4 lakh, current year share capital is 5 lakh. That means during the current year 1 lakh rupees shares were issued. So issue of shares will be taken in financing activity. Issue of shares will be taken in financing activity. See here, cash flow from financing activity. Issue of shares 1 lakh. When there is issue, there is inflow. There is inflow of cash 1 lakh. Next, reserves and surplus. This reserves and surplus which will include the profit and loss account balance. The last year reserves and surplus balance was 20,000. Current year it has become 46,000. So increase in reserves and surplus. So that is a starting point in cash flow from operating activities. This is a cash flow from operating activities. First item, increase in reserves and surplus. Last year it was 20,000. Current year it is 46,000. So 46 minus 20, 26,000 rupees is the increase in reserves and surplus. Then non-current liabilities are not there. No debentures, nothing. Current liabilities, trade payable. Trade payables are the creditors. The rule already you know. Increase in current liability, decrease in current assets should be added. Now trade payable last year 1,40,000. Current year 90,000. First of all, increase in reserves and surplus 26,000. Adjustment for non-cash, non-operating items nil. In this problem, we don't have any depreciation, we don't have any goodwill written off, no non-cash items. So just put a dash. Take the same amount, this is the operating profit before working capital changes. Now working capital changes will consider the current assets and current liabilities. So first of all, trade payable is a current liability. Last year 1,40,000, current year 90,000. Decrease in trade payable. Decrease in trade payable will be deducted. So decrease in creditors. Creditors or trade payable mean one and the same. So how much is the decrease? 50,000 decreased. So minus. Right? Next, come to assets. Fixed assets. Fixed assets last year 1 lakh. Current year 1,32,000. So fixed assets were purchased. Here purchase of fixed assets I will write down. Purchase of fixed assets. So last year it was 1 lakh, current year it is 1,32,000. So during the current year there is purchase of fixed asset. It will come under investing activity. So this is investing activity, purchase of fixed asset. So minus 32,000. Because when we purchase there is cash outflow. The outflow means in bracket. Right? Next one, current assets, inventories. Inventories of the stock. Inventories last year 1,60,000. Current year 1,80,000. So increase in current asset should be deducted. Increase in current asset should be deducted. So increase in inventory, increase in stock minus 20,000. Next comes trade receivable. Trade receivable are the debtors. So last year it is 2,40,000, current year 2,30,000. Decrease in trade receivable added, or decrease in debtors. So decrease in debtors added 10,000. We can call it as debtors or we can call it as trade receivable. Similarly, we can call it as inventory or we can call it as stock, right? That's all. Cash and cash equivalent will take last item. We should not consider it as a current asset. The cash and cash equivalent will take it lastly. So we have taken all the items. Now see, 26,000 is the operating profit before working capital changes. To this adjustment for working capital changes, decrease in debtors add 10,000, increase in stock minus 20,000, decrease in creditors minus 50,000. So 26,000 plus 10,000 minus 20,000 minus 50,000, you will get minus 34,000. This is the cash used before tax. Cash used in operations before tax. Income tax paid, not given in the problem. So this is the cash used in operating activities. This 34,000 is called cash used in operating activities. Now I am coming to cash flow from investing activity. Only fixed assets. The fixed assets purchased, because last year 1 lakh, current year 1,32,000. So 32,000 rupees worth of fixed assets purchased. So there is cash outflow. So 32,000 in bracket. So no other item is there. So take this 32,000 in the outer column. This is the cash used in investing activity. Two activities completed. This is the operating activity, this is the investing activity. Last one is financing activity. In financing activity, we take the share capital, debentures, dividend paid, all these things. So here in our problem, there is issue of shares. Issue of shares, 1 lakh rupees. The share capital has increased by 1 lakh during the current year. Issue of shares. No other item is there. Take 1 lakh in the outer column. This is the cash generated from financing. If you get positive value, cash generated. If you get negative value, cash used. So cash generated from financing activity 1 lakh. That's all. Now three values we have in the outer column. Here minus 34,000, here minus 32,000, here plus 1,000. So find out minus 34,000 minus 32,000 plus 1 lakh. You will get 34,000 positive. This is called net increase. If you get positive, net increase. If you get negative, net decrease. Here we have net increase in cash and cash equivalent. To this, we add the cash and cash equivalent of the last year. Last year. So how much is the last year's cash and cash equivalent? 60,000 given in the problem. So last year's cash and cash equivalent, or cash and cash equivalent the beginning of the current year, 1/4/2016. Beginning of the year 60,000. Now you add up 34,000 plus 60,000 to 94,000. This is the cash and cash equivalent at the end of the year, 31st March 2017. Now you can confirm whether we have done correctly or not. The same 94,000 you must get in the problem. Current year's cash and cash equivalent. So in the problem, current year's cash and cash equivalent 94,000 is given. And we also got 94,000. That means our statement, cash flow statement, is absolutely right, confirmed. If you commit any mistake somewhere, then definitely this total and the cash and cash equivalent at the end of the year will not be equal. Suppose here it is 94,000. Suppose if I have committed any mistake, I am getting 90,000 here. That means I have committed mistake in preparing this cash flow statement. If both the values are same, then our statement is absolutely right. That's it. So we have completed the 12 short problems on cash flow statement. Now I am coming to the main problems. Main problems on cash flow statement. First main problem. See that. X Limited made a profit of 18,50,000 after considering the following. So in this problem, you are not required to make cash flow statement. It is asking you, last line, you are required to ascertain the cash flow from operations. Cash flow from operations means cash flow from operating activities. So only you have to find out cash flow from operating activities. So heading X Limited, calculation of cash flow from operating activities, right? So net profit before tax and extraordinary items 18,50,000. It is given in the problem. The net profit is 18,50,000 I have taken. To this, we make the adjustment. We make the adjustment for non-cash, non-operating items. Non-cash, non-operating items. So what are the non-cash, non-operating items? First, depreciation on fixed asset. That is a non-cash. Depreciation on fixed asset, 50,000. Then profit on sale of building, 1 lakh. This profit on sale of building is non-operating income. If it is an expense and loss, it will be added. If it is an expense and loss, it will be added. If it is income, it should be deducted. Here, profit on sale of building is an income, so it should be deducted. So profit on sale of building minus 1 lakh. Minus 1 lakh. Next one, loss on sale of machinery. Add loss on sale of machinery. All these are non-cash, non-operating, non-cash and non-operating. Loss on sale of machinery over provision for taxation. I have taken provision for taxation 3 lakh. Next, provision for doubtful debts. Provision for doubtful debts is a non-cash. Then transfer to general reserve. So during the current year, some profit has been transferred to general reserve. So transfer to general reserve, 1,20,000. Last one, amortization of fictitious assets. That means fictitious assets was written off. Amortization means write off. The fictitious assets were written off. How much? 20,000. So all the items I have taken. So add up 18,50,000 plus 50,000 minus 1 lakh plus 40 plus 3 lakh plus 5,000 plus 120 plus 20. 22,85,000. So 22,85,000 is the operating profit before working capital changes. Before working capital changes is 22,85,000. Now we'll make the adjustment for working capital changes. What are the adjustment for working capital changes? See the current assets and current liabilities. The following additional information is given 31st March 2018, 31st March 2019. Our current year is 19. So debtors. Last year debtors 1,80,000. Current year debtors 1,70,000. Decrease in debtors should be added because debtor is a current asset. Debtor is a current asset. So decrease in debtors should be added. So decrease in debtors plus 10,000. Next, creditor is a current liability. So last year 1,20,000, current year 90,000. Decrease in creditor, deduct, because increase in current liability should be added, decrease in current asset should be added. So first rule, increase in current liability and decrease in current asset should be added. Here creditors are decreasing, it should be deducted. So decrease in creditors minus. Bills receivable is a current asset. So last year 70, current year 40. Decrease in bills receivable added. So decrease in bills receivable added 30,000. Then bills payable is a current liability. Last year 30, current year 35. Increase in bills payable added. Increase in bills payable added 5,000. Next, outstanding expenses. The outstanding expense is a current liability. Last year 40, current year 20. Decrease in outstanding expenses, deduct. Decrease in outstanding expense, deduct, minus. Then prepaid expenses is a current asset. Last year 20, current year 25. Increase. Increase in prepaid, deduct. Increase in prepaid expense, deduct, minus 5,000. That's all. All the items which are given in the problem. The only thing you have to remember the rule. Increase in current liability, decrease in current asset should be added. That's all. This point you remember it. The opposite will be done, deduct. Now, 22,85,000 is the operating profit before working capital changes. The 22,85,000 plus 10,000 minus 30,000 plus 30,000 minus 20,000 plus 5,000 minus 5,000, you will get 22,75,000. This 22,75,000 is the cash generated from operating activities. So we have completed the first main problem, first main problem in cash flow statement. Hope you have understood my lecture, you are satisfied with my lecture. If you are satisfied, give a like to this video. Share my channel in your group, in your friend circle, so that more students can watch the video and enhance the knowledge. And give your comments on these videos. Lastly, don't forget to subscribe my channel if you have not subscribed. Inshallah, we'll continue the next problem in the next video. Come on, see the second problem. From the following information pertaining to Ritsika Limited, compute the cash from investing activities. Simply, it is asking you to cash flow from investing activities. What are investing activities? Regarding the acquisition and disposal of fixed assets and non-current investments. Acquisition and disposal means purchase and sale of fixed assets and non-current investment, that will come under investing activity. So in this problem, you have to find out what is the cash flow from investing activity. So what information is given? 31st March 2016 last year and 31st March 2017 current year. So last year 16, current year 17. The plant is a fixed asset. The value of plant last year 2,40,000, current year 3,27,000. Provision for depreciation, this means accumulated depreciation. So accumulated depreciation last year 70,250, current year 1,10,500. And then plant costing rupees 64,000, accumulated depreciation thereon 26,500, was sold for a loss of rupees 13,000. This is the information given, and we have to find out what is the cash flow from investing activity, right? So we will open two accounts. One account, plant account. One more account, provision for depreciation account. Now see here carefully. Plant account. It's a ledger account, debit side, credit side. Plant is an asset. Plant is an asset. So opening balance debit side, closing balance credit side. The opening balance debit side to balance brought down opening. Opening means last year. So last year plant value is 2,40,000. So I have taken 2,40,000. Current year plant value is 3,27,000. Current year plant value 3,27,000. So by balance carried down closing 3,27,000. Opening balance debit side and closing balance credit side. First of all, you should take the plant. Then we'll make the account of provision for depreciation. Again, a ledger account is open, debit side, credit side. Now opening provision is 70,250. Now see here, this plant account will show debit balance, whereas provision for depreciation account will show credit balance. All provisions will show credit balance. So here opposite, by balance brought down opening to balance carried down closing. So first of all, we have to take the opening and closing balance of plant account and provision for depreciation account. Plant account opening balance debit side to balance brought down 2,40,000. Closing balance by balance carried down 3,27,000. Similarly, provision for depreciation opening balance credit side by balance brought down opening 70,250. Closing balance to balance carried down closing 1,10,500. So we have taken the opening and closing balance of plant account and provision for depreciation account. Now adjustment. Plant costing 64,000, accumulated depreciation thereon 26,500 was sold for a loss of rupees 13,000. At what price it is sold, it is not given. Sale proceed on sale of plant is not given, but it is saying that the cost of the plant was 64,000. Now see carefully here. The cost of the plant was 64,000. Accumulated depreciation thereon was 26,500. This is the accumulated depreciation. So from the cost of the plant, deduct the accumulated depreciation, will get the book value. That means written down value. WDV, written down value of the plant, is 37,500. This 37,500 worth of plant was sold at a loss of 13,000. At a loss of 13,000. So how much sale proceed we got? How much sale proceed we received? The sale proceed, loss on sale is 13,000 given in the problem. Now sale proceed received is 37,500 minus 13,000, so 24,500 rupees. That means the value of the plant was 37,500 and we sold it for rupees 24,500. So there is a loss of rupees 13,000. So sale proceed how much? 24,500. This is not directly given. We have calculated. We have calculated what is the sale proceed by selling the plant, right? The one plant is sold for rupees 24,500. Now, whenever a plant is sold, whenever an asset is sold, three entries will be passed. You have to remember. The first entry will be sale proceed. The second entry will be accumulated depreciation. And the third entry will be profit or loss. These three entries will be passed whenever an asset is sold, right? The first entry will be sale proceed. When the plant is sold, the entry will be bank account debtor to plant account. Bank account debtor to plant account. The plant should be credited by bank. Plant should be credited by bank. Sale proceed. At what price it is sold? 24,500. So 24,500 working note I have written here. First entry over. Bank account debtor to plant account. So by bank. Second entry. Accumulated depreciation account debtor to plant account. Here the name is not accumulated depreciation, it is provision for depreciation. So entry provision for depreciation account debtor to plant account. This is the entry for accumulated depreciation on that plant which is sold. Accumulated depreciation on that plant which is sold. So how much is the accumulated depreciation on the plant sold? 26,500. So entry will be provision for depreciation account debtor to plant account. So provision for depreciation debit side to plant 26,500. Depreciation on plant sold. Plant account credit side by provision for depreciation 26,500. Two entries completed. The first entry is sale proceed, bank account debtor to plant account, so by bank. Second entry, provision for depreciation account debtor to plant account. The provision for depreciation debit side to plant. Plant account credit side by provision for depreciation 26,500. The third entry will be profit or loss on sale of plant. We are having loss here. We are having loss. How much loss we are having? 13,000. The entry will be profit and loss account debtor to plant account. Profit and loss account will be debited if there is a loss. If there is a loss, so entry will be profit and loss account debtor to plant account. The plant account will be created by profit and loss account. Loss. How much is the loss? 13,000. Finished. So three entries whenever an asset is sold. First entry, bank account debtor to plant account. Second entry, provision for depreciation account debtor to plant account. Third entry, profit and loss account debtor to plant account. Over. Now we have to take the balancing figure. Debit side, take the total 26,500 plus 1,10,500, 137. From 137 deduct 70,250. The balancing figure is 66,750. This is the depreciation on all the plants during the year. That means the business is having so many plants. One of the plant is sold. Remaining plants are there. So total depreciation on all the plants during the year is 66,750. So by profit and loss account, depreciation for the year, balancing figure. This account is over. Now come to the plant account. Plant account credit side, take the total 24,500 plus 26,500 plus 13,000 plus 3,27,000. Total is 3,91,000. From this total of 3,91,000, deduct 2,40,000. The balancing figure is 1,51,000. This 1,51,000 denotes the plant purchased during the year. That means one plant is sold, some more plants are purchased. So this 1,51,000 worth of new plants are purchased. So entry will be plant account debtor to bank. Plant account debtor to bank. So plant account debit side to bank. Balancing figure 1,50,000. This is not given in the problem. By making this account, we come to know there is a purchase of plant 1,51,000. Right? completed. Now ultimately it is asking you cash flow from investing activities. Here cash flow from investing activities. There is one sale and there is one purchase of plant. Sale of plant. At what price the plant was sold? 24,500. When a plant is sold, there is cash inflow. There is cash inflow of 24,500. So sale of plant 24,500 positive inflow. Whereas purchase of plant, how much purchase of plant? 1,51,000. It is outflow. Purchase of plant will be an outflow of cash. So purchase of plant 1,51,000 in bracket. Bracket denotes outflow. Without bracket, inflow. So 24,500 minus 1,51,000. So net cash outflow is 1,26,500. So 1,26,500 is the cash used in investing activity. Cash used in investing activity is 1,26,500. That's all. This is the end of problem number 2. Now problem number 3. See carefully the problem number 3. Calculate cash from financing activity from the following of Varnika Limited. So here only cash flow from financing activity we have to find out. So last year 2016 and current year 2017. Share capital 8% preference share capital, 9% debentures, 7% debentures. Now see carefully, observe. You have to compare the last year figure with the current year figure to find out whether there is issue or redemption. If the amount increased during the year, that means there is issue. If the amount decreased during the current year, that means there is redemption. We'll compare it. Equity share capital last year 3,50,000. Last year equity share capital 3,50,000. Current year it has become 6 lakh rupees. Current year it has become 6 lakh rupees. So equity share capital has increased. That means during the year shares were issued. Shares were issued. So here calculation of cash flow from financing activity. Cash flow from financing activities. First one, issue of equity shares at a premium of 2%. How we know premium? Next line. Additional information. Additional information given. Equity shares were issued at a premium of 2%. So how much shares are issued? 2,50,000. 6 lakh minus 3,50,000. So 2,50,000 shares were issued at a premium of 2%. So here issue of equity shares at a premium of 2%. So 2,50,000 plus 2%. Plus 2%, you will get 2,55,000. 2,55,000. This is the issue of shares. So cash inflow. When shares are issued, there is cash inflow. First item completed. Now second item. 8% preference share capital. Last year it is 50,000. Last year 50,000 preference share capital was there. Current year nil. No preference share capital. That means preference shares were redeemed during the year. During the year, the company has redeemed the preference share, returned back the amount to the preference share holders. Redemption of preference shares. So here second, redemption of 8% preference shares at a premium of 2%. In additional information you can see. 8% preference shares were redeemed at a premium of 2%. Company has paid 2% extra. So how much was the preference share capital? 50,000. 50,000 into 2%, 1,000. So redemption of 8% preference share at a premium of 2%. So 50,000 plus 2%. If you add up 2%, you get 51,000. 2% means 1,000. So company has repaid the amount 51,000. Actually preference share capital was 50,000. But in the additional information it is given, it was redeemed at a premium of 2%. So 51,000. When redemption of shares was done, it is cash outflow. Company has repaid the amount. It is cash outflow. That's why in bracket I am taking. 2 points more. Next is a 9% debentures. 9% debentures last year nil. Current year 1 lakh. That means 9% debentures were issued during the year. Current year it was issued. So issue of 9% debentures at a discount of 1%. In additional information you can see 9% debentures were issued at a discount of 1%. So 1 lakh rupees ka 1% 1000. So when the company issued 1 lakh rupees worth of debentures, it was issued at a discount of 1000. The company will get 1000 rupees less. So 1 lakh minus 1000, 99,000. So issue of 9% debentures at a discount of 1%. So 1 lakh minus 1%. So 99,000 is the inflow. Because debentures are issued. When debentures are issued, there is cash inflow, 99,000. Next point is 7% debentures. 7% debentures, last year 50,000, current year nil. That means 7% debentures were there last year, current year it was redeemed. Redemption. So redemption of 7% debentures at a premium of 5% because it is given in additional information. And 7% debentures were redeemed at a premium of 5%. At a premium of 5%. So how much was the 7% debentures? 50,000. 50,000 के ऊपर 5% premium. तो 50,000 plus 5%, 2,500. So 52,500. The company has returned back the amount of debentures, 52,500. It is cash outflow. Redemption is a cash outflow. So in bracket you should write minus. Then all the points we have taken. Now see the adjustment, additional information. Equity shares were issued at a premium of 2%. We have taken 2% premium on equity shares. 8% preference shares were redeemed at a premium of 2%. Here 2% redemption we have taken. Third, 9% debentures were issued at a discount of 1%. So 9% debentures were issued at a discount. And 7% debentures were redeemed at a premium of 5%. 7% debentures. Now last one is underwriting commission on equity shares was paid at 2.5% on issue price. Underwriting commission, that is also paid on issue of equity shares. So equity shares, what is the proceed of equity share? 2,55,000. 2,55,000 the company has received on issue of equity shares. And these equity shares are underwritten. When underwritten, commission will be paid. So how much commission paid? 2.5% on issue price of equity shares. So issue price 2,55,000. So underwriting commission on issue of equity share 2.5% of 2,55,000. It comes to 6,375. It is cash outflow because it is a payment. So bracket 6,375. Now take the total. 2,55,000 minus 51,000 plus 99,000 minus 52,500 minus 6,375. You will get 2,44,125. 2,44,125. Still two more items. Two more hidden items are. Hidden items means the interest paid and dividend paid is also a part of financing activity. So interest will be paid on debentures. Debentures means all, we have two types of debentures here. 9% debentures are issued during the year. No interest should be calculated on this issued. Because during the year it was issued, interest will be paid in the next year. Those debentures which are issued during the year, the interest will be paid in the next year. But those debentures which are redeemed, on that interest will be paid. So how much? 7% debentures were there last year, 50,000. Last year 50,000. This year it is redeemed. But before redemption, interest will be paid. So we calculate interest. 7% of 50,000. So interest paid on 7% debentures. 7% of 50,000. 3,500 is the interest paid on 7% debentures. 3,500 in bracket. Similarly, preference dividend. Last year preference share capital was 50,000. 8%. 8% preferential capital, 50,000 last year. Current year it was redeemed. But before redemption, the company will pay preference dividend. The preference dividend is also a part of financing activity. So preference dividend paid, 8% of 50,000, 4,000 rupees. It's cash outflow. Interest paid, dividend paid are outflows. So bracket. Now subtract. 2,44,125 minus 3,500 minus 4,000, you will get 2,36,625. This is the cash flow or cash generated from financing activity. Cash flow from financing activity, that's all. So these two problems, second problem and third problem, we have seen regarding cash flow from investing activity and here cash flow from financing activity. So totally three main problems we have completed. Next video, fourth problem will start. From those problems directly we have to make cash flow statements in the coming problems. So if you are satisfied with my lecture, give a like to the video, share my channel in your group, in your friend circle, so that more students can watch these videos and enhance the knowledge. Give your comments, and lastly, don't forget to subscribe my channel if you have not yet subscribed. Inshallah, we'll continue the next problem in the next video.